Welcome to Resilience and Resolve with Lance Drury.
Hello and welcome back to Resilience and Resolve with Lance Drury, the show that helps individuals and small business owners fight back when the IRS comes calling. Lance Drury is a seasoned tax attorney who has been defending clients for over 20 years with one goal in mind: protecting what matters most. I'm Evan Mack, and today we're talking about the hidden dangers and estimated taxes, especially for self-employed people who think they're staying compliant, but still end up owing more than they expected. This is Self-Employed Estimated Tax Pitfalls. Lance Drury, sir, welcome back.
How you doing, Evan? It's always great to see you.
Oh, listen, it's great to be seen, and it's good to see you as well, sir. Now, listen, let's get down to brass tacks. For people who haven't dealt with this before, what exactly are estimated taxes and who's required to pay them?
Well, self-employed individuals are required to pay estimated taxes on a quarterly basis. If you're self-employed, it's at the end of every quarter. But I can tell you there's nothing magical about paying at the end of the quarter. Realtors have 4 times the national average of tax problems. And the reason is in the first month of the quarter, they get a big commission. They don't send any of the money into the IRS. They don't have any commissions in the second or third month of the quarter. The tax becomes due, and guess what? They've already spent all that money. So what I tell realtors or anybody who's in a commission-based area, when you get that commission, write a check out to the U.S. Treasury. Make sure you notate the check properly. You got to put it on that it's for estimated tax payments for the current year. You put your EIN number on there or your Social Security number, and you send 20 to 25% of that commission to the IRS for the current year. Because if you don't notate it properly, the IRS is going to put it towards your back taxes. Because if the check doesn't say when you wanted to, what you wanted applied to, the IRS is going to apply it to the back taxes, and you've defeated the whole point of making estimated tax payments. And the first thing that you have to do as a self-employed individual is start making your estimated tax payments, because you're not going to get a deal with the IRS if you don't do that. The biggest mistake I see self-employed people make is they don't want to get levied. So they call up the IRS. They make an agreement on the back taxes. It's always for the full amount. And then guess what? They make that payment, but there's nothing left over to pay the current year's taxes. And so the liability just pyramids, because they're going to continue to accrue liability. And the beauty of that is not only that you're going to be compliant moving forward, but you can get a better deal on the back taxes, because if you make estimated tax payments, that's an allowable expense in determining your ability to pay on the back taxes. So, for example, if you're paying the IRS $1,500 a month on your current estimated tax payments, that's $1,500 less a month you're going to have to pay on the back taxes.
So, Lance, why do self-employed individuals and small business owners often, why do they get into trouble, though? What is it? Is it kind of a little bit what you said, or are there other things that kind of get them kind of in the weeds a bit?
Well, I think there's a couple things. One thing is one of their customers doesn't pay them. So to keep the business going, they pay their suppliers, they pay their employees, they don't pay Uncle Sam. They think they're going to catch up on the tax payments the next quarter. And guess what? It just kind of pyramids, and it gets worse. Bad economic times, to keep the business going, they do the same thing. But the other thing is, everybody thinks that being self-employed is the American dream. But most small businesses, the vast percentage of small businesses, do not make a lot of money. You have to fund, I think it's like $80,000 or less a year. And then guess what? You got to pay your own medical insurance. You got to pay your own retirement. So most of them don't have a retirement.
Wow.
And so the other thing is the problem is there's a lot of paperwork. There is so much government bureaucracy for a small business when you're self-employed. And so a lot of these people, they work a lot of hours. They get home 7, 8 o'clock at night, and the last thing they want to do is paperwork. They can be very good at what they do, but they're not business people. So, if you want to be self-employed, my advice is get on the internet, Google, what do I need to know? What paperwork do I need to do if I'm going to be a self employed individual? Because I've had people tell me that when they came to me, they learned so much about what they needed to do in their business for it to be functioning properly,
Wow.
just because nobody trains them. Nobody tells them. You're just supposed to know all this stuff. And so, it's a lot harder deal than if you're a W-2 employee, because the
Hmm.
taxes are automatically taken out. You get your retirement done through your employer, you get your health insurance through your employer. But it's a different game if you're self-employed, and you have to have a different mindset.
Hmm.
Entrepreneurs definitely have a different mindset. It's not for everybody because there's risk involved. When you're self-employed, you never know from one quarter or from one month to the next,
Right.
how much income you're going to be in. Some businesses are seasonal. And so, when you deal with a seasonal business and you make an agreement with Uncle Sam, they're going to consider the full year. And so you have to have the discipline that when you have those big months, you're going to sock some of that money away so that you can pay on your installment agreement to the IRS when you go through those lean months.
Hmm. So can you explain how the IRS kind of calculates this underpayment penalties and why even a small mistake can lead to this extra debt?
Well, I think that the penalties for failure to pay are half of 1%.
Okay.
If you get an agreement with the IRS, I think it's a quarter of 1%. Uh, and so, that's how that's calculated. The penalties don't go away for failure to pay,
Hmm.
because it's just like a loan with the bank or anything else. They consider when you owe them money that it's a loan. You owe them money, it's a loan. They're going to tack on penalties and interest. But Evan,
Right.
if you and me charge what the Internal Revenue Office charged for taxes, for penalties and interest on those unpaid taxes, I've told you this before, we'd both be in the federal clink.
In the pokey, what's the difference between paying based on last year's liability versus this year's projections, and like which is safer in your opinion?
Well, I don't know if either one of those is safe.
Oh
I
wow.
think what you need to do is, you need to have a separate bank account, because then you know how much money you have there at the beginning of the month. You know how much is there at the end of the month. You can determine then your profit, and then okay, I made this much. I'm going to send 20 to 25% in to Uncle Sam.
Mm,
And, don't wait till the end of the quarter, because you won't have the money. Uncle Sam is happy to take your money anytime. And it also makes sure that if you pay as you go, you're going to get credit for that. You're going to get a better deal on the back taxes, and you're going to be compliant moving forward. And then you don't have this problem of trying to come up with all this money at the end of the quarter to send to Uncle Sam.
hmm. Are there certain professions or income patterns that are especially prone to this estimated tax issue? Is it typically restaurants? Is it stores? What do you think?
Well, I think I said earlier that realtors have four
Yeah.
times the national average of tax problems. I would think the ones most prone are people that are in a commission based business, because
Mhm.
they don't think about sending a percentage of that commission into Uncle Sam when they get the commission. And like I said, then we
Mm.
come to the end of the quarter, the taxes due, and those commission based people have spent all the money. There's no money there then to send into Uncle Sam. So I think in the self employed area, the commission based people have the biggest problems.
But Lance, what if somebody misses a payment or underpays all year? How bad can the penalties get? And is it too late, or can they go back? How does that work?
Well, you need to call the IRS and set up an agreement. You need to make
Mm,
sure that you're compliant moving forward, or you're not going to get an agreement. You got to be compliant moving forward. You got to have the estimated tax payments for that particular year paid, especially if you're going to do an offer and compromise. They are not even going to look at an offer until you make the estimated tax payments for the current year, and then call the IRS up once you've done that. And
mhm.
once you're compliant moving forward, and set up a deal on the back taxes that are owed.
What if they haven't made this estimated payments? They want to fix it maybe in the middle of the year. What options do they have actually?
Well, they can call them up and make the estimated tax payments at that time,
Okay.
but there's going to be penalties and interest attached to that as well because they paid late.
They can't avoid those penalties even if even if they
No,
catch it and they.
no. Once you're late, you're going to have to do something. Now, obviously, if you can prove to the IRS that you don't have the ability to pay that liability back through financial statements, bank statements, and all that, then you're going to get those penalties and interest kicked in whole or in part because you're paying less than the full amount back
Hmm.
if you don't have the ability to pay the whole thing back. And you can prove that to the IRS. So that's one way that you can get it kicked. But you're going to have to submit financial statements and other financial documentation that proves to the satisfaction of the IRS that you don't have the ability to pay this back in full.
Hmm. So how can a tax attorney help prevent or resolve problems related to these estimated taxes, Lance?
Well, I think the big thing is that we keep people compliant moving forward. We do three things. We have a three-part escape plan. Number one is preventing the IRS from levying your income and your assets. Because if that happens, they're just going to wipe you out. I had a guy in Tennessee not too long ago. He owed 1.2 million. He didn't hire us. He's in his 50s. He lost everything, including
Wow.
over 300,000 in his retirement account because he thought he could do this on his own.
Wow.
Secondly, get you caught up on an installment agreement or an offer in compromise. A lot of times we get people partial pay installment agreements. 85 to 90% of our clients never pay back the full amount. 10 to 15% never pay a dime. And number three, we're going to ensure that you're compliant moving forward. That's how we save Fay Ray from the clutches of King Kong. I'm the liberation architect, Evan. We give most tax attorneys talk numbers. I talk financial freedom. I talk about getting you away from the clutches of the IRS so that you can have peace of mind, have monies, have assets, have income, protect your retirement, and get your peace of mind back.
If this for y'all listening, that's the woman that King Kong holds at the end on the top of the tower. If you didn't catch that.
I can't believe there's people out there that have never seen. I mean, it was only made in the 1930s, Evan.
That's a classic, though. I'm sorry, classics never die.
That's right.
So, Lance, what's your advice to self-employed listeners who are afraid they're already behind and they do not know where to start?
Call me. Go to Lance Drury Law, and you'll see the numbers of all my offices there. We have offices in Ste Genevieve, Missouri, which is a small town an hour south of St. Louis. We have an office in St. Louis tomorrow, Saturday. I'm going to my St. Louis office to meet somebody that owes over 400,000
Ooh.
and has a revenue officer breathing down his neck. We have offices in Nashville, Tennessee. I have 4 attorneys, 2 legal assistants there. I have 2 attorneys that will be in my San Antonio office next week. And then we're going to set up an office in Houston, Texas. Because, Evan, I'm in the prime of my life. I got to keep growing the business.
Keep growing it, man. Listen, keep growing it. Hang in there. You know what I mean? Help these people fix these tax problems, Lance Drury.
That's what I plan on doing, Evan.
My man, appreciate you, sir.
Okay, it's always great to be here, Evan. Always good to see you.
Good to see you too. And thank you all for tuning in to Resilience and Resolve. If estimated tax payments have caught you off guard, or if you're not sure how to avoid that future penalty, you heard the man. Visit lancedrurylaw.com to get these answers and build a plan. Don't forget to like, subscribe, leave a review, and share this information with someone that might find it helpful. Thank you so much, and we will see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.